Support for today's episode comes from Amazon. Amazon is working toward a carbon free energy future, doing more with less, investing where it matters most, and supporting communities where we operate. Electricity has become a strategic resource, not just a bill. For most of modern business history, electricity was a cost to manage, not a constraint to plan around. That is changing faster than most capital planning processes have adjusted to reflect. There is a simple test for whether something has moved from an operating expense into a constraint that shapes strategy. When the question stops being how much does it cost and becomes can we get enough of it, the category has changed. Electricity passed that test sometime in the past 2 years, and the organizations that have not noticed are building expansion plans around an assumption the grid cannot always support. The scale of the problem is not theoretical. More than 2,500 gigawatts GWs of projects covering renewables, storage, and large load facilities, including data centers, are currently stalled in grid connection queues worldwide, according to the International Energy Agency's Electricity 2026 report. Meeting forecasted demand through 2030 would require annual grid investment to increase roughly 50% from today's $400 billion, and that investment is not yet committed. Transformer lead times that once ran 12 to 16 weeks now routinely stretch past 2 years for large units, per EEL's April 2026 analysis of grid capacity and site selection. A facility that breaks ground this year may not receive full electrical service until 2028. That mismatch is not a scheduling inconvenience. It is a structural gap between how fast companies want to move and how fast the infrastructure serving them can respond. Several large demand trends arrived at the grid simultaneously. Part of what makes this moment different from prior periods of grid stress is timing. Data centers powered by AI workloads require vastly more electricity than the computing infrastructure they are replacing. A single AI-related task can consume up to 1,000 times more electricity than a traditional web search, according to Enki AI's 2026 grid strain analysis, which means a handful of large AI facilities can destabilize a regional supply in a way hundreds of conventional data centers never could. That demand spike landed on top of manufacturing reshoring, industrial electrification, and transportation electrification, all accelerating in the same period, in regions where transmission capacity was already aging and interconnection queues were already long. Gartner projects that power shortages will restrict 40% of AI data centers by 2027. That forecast is not about distant future conditions. The constraints producing it are visible right now in interconnection queue data. Major operators have already started responding by allocating capital directly towards securing or developing their own generation assets, bypassing utility timelines that cannot match their build schedules. When companies the size of Microsoft are structuring $15 billion investments partly around access to power-rich geographies, it signals something that procurement and facilities teams at smaller organizations should be watching. The market is pricing power access as a competitive variable in a way it did not 5 years ago. The site selection question that used to come last is now coming first. Talk to a facilities team that has tried to site a large industrial or manufacturing facility in a constrained region in the past 18 months, and the story tends to follow a pattern. The zoning works. The labor market is viable. The logistics are acceptable. Then the utility conversation happens, and the timeline for grid service pushes back far enough that it changes the economics of the whole project. Utilities in some regions are now telling prospective customers that new service at meaningful scale may require years of substation upgrades, transmission additions, and interconnection studies before capacity can be committed. Securing grid capacity can take longer than obtaining financing or completing permits. Facilities and energy leaders still treating site selection as a real estate decision with power as a late-stage detail are making a sequencing error that is becoming more expensive. Grid modernization analysis from Silverline describes it in terms of regional competitiveness. The areas that move fastest on grid capacity are capturing the investment that areas with constrained supply are losing to longer timelines and uncertain costs. What changes when power access moves into the capital planning conversation? The organizations that have made this adjustment are doing something that looks different from the ones that have not. They are engaging utilities before a site decision is final, rather than after it is announced. They are building power access scenarios into capital budget assumptions, alongside labor cost and construction cost. They are pursuing long-term power procurement agreements, not primarily for price certainty, but for capacity certainty, locking in access before competing customers fill the available headroom. Behind the meter generation, battery storage, and microgrid capability are being evaluated as operational continuity infrastructure rather than sustainability investments. None of those moves is complicated in isolation. What makes them difficult is the organizational habit of treating electricity as a facilities management detail that gets resolved after the strategic decision is made. That habit made sense when power was reliably available at whatever scale a business needed it. It is producing planning gaps in an environment where the answer to can we get enough power is sometimes not on your timeline. Grid capacity cannot be solved quickly once it becomes a binding constraint. Transmission infrastructure is measured in years and sometimes decades. The transformer shortage is not a quarterly problem. The interconnection queue is not clearing faster than it is filling. For executives planning the next facility, manufacturing expansion, or data center deployment, electricity access belongs in the strategic conversation earlier than most planning processes currently put it, and discovering that it should have been there earlier is a more expensive lesson than treating it as a prerequisite from the start. Sustainability Soundbites energy coverage is sponsored by Amazon. Visit the link in our show notes to learn more about Amazon's spotlight on energy. For sponsorship opportunities with Environment and Energy Leader, please reach out to a member of our team.